SVB, the 16th largest bank in America, just collapsed. On top of that, the other two largest crypto banks in America also collapsed and are completely wiped out. Another really concerning thing is that CZ Binance just made a very concerning tweet saying that he really doesn't trust any other stablecoins and he's making a really risky bet with the assets because he's basically being forced to no longer trust and hold any stablecoins. Now, this is a little bit complicated, but I made this nice little diagram over here to explain everything and what I think is going to happen in the future for the entire crypto industry. All right, guys, let's dive right into this trusty little diagram. Now, I could be wrong about some things, so don't take my word for it, but I did just a little bit of research and let me know in the comments if you find anything wrong. But this is getting really juicy. Silicon Valley Bank, or SVB, has been around for 40 years and it collapsed in 36 hours. Why? Let's take a look at what's going on. Now, first and foremost, this bank has been around for a long time. It had a big track record. Jim Cramer was just recently telling everyone that it's a strong buy. Of course, he is wrong again, and now SVB is gone and wiped out within 36 hours. Now, it's been known as the startup bank in Silicon Valley. If we look at who had deposits on this bank leading into the collapse, Circle, the number one deposit with 3.3 billion of their cash reserves. Circle is the USDC stablecoin. As they minted USDC in exchange for fiat, they took the fiat and then put it on SVB's bank and had 3.3 billion of that reserves on the actual bank for deposit of SVB. Bill.com, 670 million. Roku.com, 487 million, BlockFi, 227 million. A lot of startups. This was looking very, very bad because so many startups had a shitload of cash here on the deposit books for SVB Bank, and now it's gone. Let's just look at what actually happened here. Now, most banks operate on a fractional reserve system, which means they need to hold a minimum of 10% of the deposits on hand so they can handle withdrawals when clients need to get money out to do whatever they need to do with it, whether it be for operations, funding, or what have you. The rest of the 90%, typically banks use it to lend out to earn interest to other clients. And this is how banks get rich. They use your money to make money. Now, where SVB went wrong was in 2021, they made a $100 billion bet on U.S. Treasury bonds, locked in at 1.7% interest rate for 4 years, not expecting the huge increase in inflation and the Fed to raise the rates all the way upwards of 7%, which crushed the value of the bonds, showing a massive unrealized loss on these bonds, which basically let everybody know that SVB is now insolvent because they took $100 billion in funds, and now that took a big, big dump after the interest rates increased and saw a massive unrealized loss. Now, as the bear market ensued, a lot of the people who had money on SVB needed funds to continue operations and started asking for a lot of withdrawals. They were running low on their fractional reserves. As you know, they could only need to hold a minimum of 10%. The rest is being lost on the treasury bonds because they can lend it out, and that's how banks make money. As the increase in demand for withdrawals, basically because we're in a bear market, companies need cash to operate, SVB couldn't meet those demands, so they announced a $21 billion bond sale of that investment, showing a $1.8 billion realized loss. They also announced a $2.3 billion stock sale to cover that bond loss. This just basically sent pandemonium and panic through the air, where the stock plummeted 60% in one day, and then the bank run began. A bank run is simply when all the people who have deposits on the bank try to get all their money out at one time, but as we know, it's a fractional reserve system. They only need to require 10% minimum on hand at any time. Now, all the depositors are like, oh, fuck, give us our money. Wait, you don't have it. Oh my God, we are so fucked. So true. And then SVB is like, guys, we're a fractional bank. We don't have your money. We are in the process of still losing it, which they currently are with the remaining huge bonds that they have, which are also still decreasing in value. And they already sold 21 billion of it with a $1.8 billion loss. So this is basically just sent a lot of fear across the board. Well, the depositors like, fuck, are you kidding me? Damn, I forgot that's how banks work. Why did I trust you with all my cash? So you have to understand that when you give your money to a bank, whether you're a business or personal, they're lending all that money out. And a lot of times they're not liquid. They have it in other things like this 4-year treasury bond that was locked at 1.7%. That's locked until they can sell it. Now, when they don't have that money liquid available, that's what causes a bank run. And that's when the FDIC had to step in and take over SVB and just seize all the assets and stop all operations from getting any worse, because at this point it's just pure panic and nobody knows what to do. Now, the FDIC insurance covers deposits up to $250,000, which is very, very basic. But at the end of the day, that's not a whole lot of money. And 97% of SVB clients have a balance of over $250K. In fact, the average client balance in their bank account is $4 million. million, but as we saw, there's a lot more than 4 million in a lot of these bank deposits, such as Circle 3.3 billion, all the way down to the lowest of 7 million, but a lot of other hundreds of millions of dollars that are being deposited here that are not covered by insurance that could potentially all be wiped out. So this basically just caused a lot of fear of, okay, what is this? Financial Armageddon? What exactly is happening here? And Circle actually came out and said, hey, we're kind of fucked here. We don't know what's going to happen. And we tried to get our 3.3 billion out and the wires never processed because they were also participating in the bank run, trying to get their money out, but they weren't able to do it. Now, simultaneously, as all this was happening, this weekend, Signature Bank closed by regulators, the third U.S. bank failure in a week. This is also one of the top 2 banks in the US that helps on-ramp fiat into crypto, just like Coinbase that helps on-ramp fiat into crypto. So when you open your account at, say, Coinbase or Kraken, you deposit fiat and then you can convert it to crypto. How they do that is they go through a bank like Silvergate, which was also got collapsed during the FTX thing, and also now Signature, which is also just collapsed. Coinbase themselves had $240 million at Signature Bank. Not looking good the way this is playing out, and it's extremely scary. Here's another thing that actually is very interesting from Elon Musk. How are Americans supposed to deposit to crypto now? Who will support stablecoins? Somebody just tweeted, I think Elon Musk should buy SVB and become a digital bank, and Elon actually said, I'm open to the idea, which would be very interesting because he basically just had a big fuck you to the government by buying Twitter, releasing all this evidence about them tampering with a lot of things that the government was doing. And now the government could potentially be tampering with these banks because they don't want crypto and they just collapsed all the top crypto banks in America. What if Elon comes in and steps in and says, hey, you know what? I'll start a crypto bank and fund this and do this correctly. Now, that's not where it ended because after they found out that USDC was exposed to SVB with $3.3 billion in funds, USDC depegged 13%, which was quite scary. If you don't know, I lost $2 million on UST during that depeg because I had $2 million in UST. On Anchor Protocol, I was earning $30,000 a month just sitting on my hands doing fuck all. Learn my lesson. Don't trust stablecoins. If you see a depeg, you get out immediately. So I actually sold all my USDC, lost about 20 grand, which, in the grand scheme of things, isn't a lot of money for me. I got it out 98 and a half cents. Saw this massive depeg, which is not okay. Stablecoins shouldn't be able to depeg. If they can, that means there's something wrong with the system. If it can be manipulated by people running to the bank and getting everything out at the same time, obviously this isn't a safe place to put your money. The government said on Sunday, Janet Yellen said, we're not bailing out any of the banks. They're all fucked, but they're going to protect the deposits. So all the companies and startups that have deposits on these banks, the Fed is calling it an emergency fund. I don't know where the money's coming from, but they said it's not going to be coming out of taxpayer dollars, but obviously they're just going to be printing cash to fix this, of which they're already printing cash, and they already printed a bunch of cash during That's why inflation here is now they're going to print more cash, create more debt to pay off this debt. Overall, this is not looking good, and it's extremely scary about where this could lead because it just seems like this is a never-ending trail of debt to pay off more debt, and it just seems unsustainable. USDC has attempted to repeg after that news that all the deposits are going to be backed, which is a good thing. I don't want to see USDC get destroyed. I love stablecoins. I would love to be able to use stablecoins and at least trust them. But after seeing this with USDC, I'm scared to be holding stablecoins overall until something else comes out or there's better financial regulation around it. It's scary, because you can lose all your money. You can sit on the sidelines like I was with UST waiting for the market to crash so that I can use $2 million to buy the dip. But now, as we've seen, holding stablecoins while waiting for the dip is also extremely dangerous. I already lost $2 million holding UST, and now I see USDC, the other stablecoin that I was holding, depegging. Okay, so everything is looking quite scary at the moment, but BTC also squeezed off the lows 15% or 3,000 points. We also have to note that CPI numbers are out today. Well, it's Monday right now, but they're out Tuesday. And also, one more thing that's cause for concern. CZ Binance just tweeted, given the changes in stablecoins and banks, Binance will convert the remaining $1 billion industry recovery initiative funds from BUSD to native crypto, including Bitcoin, BNB, and Ethereum. I actually replied to this. A lot of people have liked it so far. And I said, remember when Stablecoin put all the reserves into Bitcoin just before it collapsed and totally destroyed their ability to recover? This is fucking scary. And then reserves in BNB. Remember when FTX used their own token as reserves? Oh my God, this is so bad. Because it is. He's basically saying that he's been forced into a wall and stablecoins are no longer safe for them to be holding because we don't know what's going to happen to them. BUSD is basically banned in America now. USDT could potentially get banned in America. And USDC is facing insolvency problems. None of it looks safe at the moment. And the other thing that's very, very scary, now obviously this is the industry recovery fund, but he's using an industry recovery fund and assets that will all crash if things get bad. So how do you use an industry recovery fund with assets that will all crash if things do get bad? Sounds like a weird thing to me, but that doesn't sound like a safe environment. But he has no other choice. He's worried about the banking system and worried about stablecoins as well, of which I am as well. So he's being forced to hold something that's extremely volatile and extremely risky to do, which makes a lot of uncertainty in the crypto market going forward. If we look at what's going on right now, UK 100 is getting shat on, of which we are short from the top. As you can see here, already locked in gains along the way, but we got short here, now dumping into the weekend as banks are opening and the stock market is getting ready to open. A lot of things are down pre-market. We're also short on Bitcoin. I locked in most of my gains on this massive dip. You can see I have a $51,000 realized profit. I just re-added short again as we spiked up into here on the news that the depositors are going to be protected. So I'm still up 7,000 on that position. I re-added 8 Bitcoin as we push in here, and I'll continue to add here. But I'm also continually short all US stocks, short S&P 500, still think we're going lower, short US 30 from the top, still think we're going lower. But overall, guys, things are not looking good. CZ's scared of stablecoins. All the crypto banks in America are going under. Who's going to save the day? Could Elon Musk do it? I don't think so. I think he's too busy with Twitter right now. But overall, pretty hectic market out there. And we're still, I think have a lot of room to drop, especially CZ's putting all his eggs in, at least for the recovery fund, into assets that will also crash. It's hard to fix the market with assets that are crashing with the market. So I don't know how that's going to work. But anyways, like, comment, subscribe. Let me know what you guys thought of everything that's going on. What are you doing with your stablecoins? Where you're putting your money? And are you worried about your banks in America? Because I am. I don't know what's going on, but it's all a little bit scary. So be safe out there, guys.